Statistics indicate that HUDI may be facing another upside move, but just how far can it go up? Where can it find resistance? Well, let's go ahead and find out in this video. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an HUDI statistical and technical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. Without any further ado, let's dive right into the chart. Okay, so we are looking at HUDI in the 6-hour chart right over here. The backtest that we performed was volatility versus momentum profile. Now, the criteria for that is the duration of the iteration, the upside thrust versus the amount of times that the iteration gets the upside correct or incorrect, which is represented by these green and red lines. Now, for the new viewers, we are looking at volatility right over here. Volatility is represented by this indicator, BBWP. Volatility is direction neutral, so we would actually need to pair it with a stochastic momentum or a momentum oscillator similarly to this indicator right over here. It is similar to an RSI, so we can actually use terminology like oversold and overbought within these levels. So let's go ahead and open up this stochastic momentum just to show you a couple key facts. Now, the backtest is performed throughout the entire trading history of HUDI stock. So we're looking at, let's see, that's February 1st, 2021 to about today, you guys. So now what we have noticed here is that we have two very, very historical lows printed in the 6-hour chart particularly. So we are talking about immediate short-term time frame, and when I say immediate short-term time frame trade like this, you guys, I do mean a swing, possibly within the next trading session or two, because we do have that announcement, the formal announcement, the presidential announcement coming up on Tuesday, where President Trump is going to be talking about his formal running of presidency and potentially him making a bid for Speaker of the House, which would essentially make the markets run to the upside, you guys. There is a risk factor within that. So we just have to make sure to practice our risk management, make sure that we keep our stop losses in, and most importantly, remember that I am not a financial advisor. I can't actually suggest for you to buy or sell any asset. Please take whatever I do show within these videos as a form of entertainment, and we'll be okay, right? So just please do your own DD and we'll be fine. So now, yeah, you guys, so we are looking at a low, the previous low that we had, which was in October 31st, just recently, we had a print of 0.20%, and now we have made a slightly higher print based on this lower part right here, which is about, let's go ahead and make that correction actually. Yeah, it is 0.33%, which is absolutely historical lows based on the time that HUDI stock has been trading. So now we are looking at a trend line regression rejection type of situation once more, similarly to other stocks that we are looking at. The criteria for us to be able to make that move to the upside is that we need both of the volatility component, which is this spectrum line right over here, and the moving average of the BBWP, both pivoted towards the downside and below the critical expansion volatility zone, which I consider to be anything above this blue line, 90 percentile. So we do need both of the volatility component and moving average below this, pivoted towards the downside, alongside stochastic momentum pitched to the upside as well. Now, if we just take a quick look here, we can see that we are now starting to make that ascent, which is very good for the coming days for HUDI. Now, let's look at those metrics, you guys. So I have backtested the momentum oscillator by itself throughout the entire trading history of HUDI, and out of 13 total iterations, we have guessed the upside correctly 10 out of those 13 times, giving us an averaged upside accuracy of 76.92%. Now, what I mean here, same accuracy as the profile, but not the same incorrect instances, is due to the fact that we also have, out of the 13 iterations based on volatility versus momentum profile, we also have correct guesses to the upside that are landing at 10. With 3 incorrect, very similarly to the momentum oscillator, except that those guesses to the upside or the incorrect guesses were not actually in the same iteration that this volatility versus momentum profile got incorrect. So they are separate iterations that just so happen to land within this same percentage. So now, based on the volatility versus momentum signature, we are looking at an average upside accuracy of 76.92%, similar to the momentum oscillator, with an average upside thrust of 119.30% over the span of just under 23 days. We're at about 22 3/4 days. This is proof of work. So if we were to apply, since we are looking pretty good right now, we're already making this volatility component and the average come down, which indicates that the move is now in play, that the statistics can actually be close to for us to be able to apply these metrics, and as well as the momentum oscillator, of course. So let's just go ahead and hide that and apply the 119% to the upside, and we'll apply it from the current position from where we closed on Friday, which was just about $9.70. So applying that 119% move puts us at just about $21.28. And that $21.28 in a short-term Fibonacci retracement is very much in confluence with our 3.618 golden mean. Very good to see results like that. And now the move to the upside that we got just on the last trading day, we found resistance right at the 0.618. So we are following market geometry. These moves are geometrical in a sense. So the support that we found is this candle closure, you guys. It's right over here, which is why the candle stopped right there. We are looking at this in the 6 hours, so it is not so micro supervised. We get a better perspective when we start looking at larger time frames to see an overall picture of the potential direction for the asset's movement, right? So let's now take a look at the next chart and see what we have. Within this chart, you can notice that we broke out of a triangle right over here. It had a bullish setup. Now, in order to gain a price objective from the triangle, we actually take a trend line from the hypotenuse of the triangle to the lowest point of the triangle and take this and apply it to the point of breakout. And you can see that it's giving us a target of about $11.87. Now, if we just move this to the side and look at the candle, here are the metrics right up here, so you can see what the candle closure, low, high, and open is. We can see that the high of the candle was $11.40, and our price objective is $11.86. So we more or less already fulfilled that price objective based on the technicals of how to trade a bullish triangle, and we did absolutely break out within the 75% of completion, or approaching the apex of the triangle. We are also printing a possible bull flag, which can indicate a potential upside as well. Bull flags I don't usually tend to follow. It's a lot better for us to follow triangle formations because they do have a higher hit rate than any other formation. So we did find support right at the 7-day exponential moving average, and we do have the 10-day simple moving average acting as a support as well. For bull flags, I usually like to see 2 pullback candles followed by the third or fourth candle being the one that pushes to the upside. We are slightly past that just now, but it could be possible that we are trading that bull flag within a bi-hourly chart, in which case could still be present. There is a couple things that I've noticed here, but are not absolutely necessary. Usually breaking out of a triangle means that we need a retest of the newly converted resistance into support before a continuation onto the upside. We do have 2 primary moving averages. Remember the SMA 10 and the EMA 7 as a form of support for us to continue. Now, let's look at that price objective one more time for the upside thrust. We're looking at $21.28. That has a lot of confluence right over here. And also with our larger term Fibonacci retracement, we can also see that we are in confluence with the 2-spot 272 at 2106, where the 3-spot 618 is 2128. We can see the 2128 target right over here, but if we look at it in the bi-hourly, you'll see that this is the 30-day exponential moving average has some play in this. And what I mean by some play is that we can potentially realize the 119% move to the upside, thus testing this previous low that we had before this massive capitulation event. We can test this low and then retrace back to use our 30-day exponential moving average as a form of support before continuing on to the upside. This is very much a potential. Now let's go ahead and move on to the RSI and see what we have. Okay, so I have printed 1, 2, 3, 4, 5, and 6 primary drives of bullish divergence within the daily chart, which is something that's very good. We can actually apply weight to larger time frames. Please remember, you guys, this is something that we talk about often. So we do have this in play, and it looks like it's just recent, and it's just starting to create that upside move. Okay, so for the new listeners, this is a regular RSI setup. The upper half is the bullish control zone. The bottom half is the bearish control zone. The inner workings of either zone is the weakness percentile, and the outer workings is the strength percentile. Now, the smooth purple line is the RSI signal, and the pink line is the moving average, which is based around a 14-day period for us to be able to evaluate. Now let's go ahead and move on to a multi-pane and see what kind of time frames we can look at for. Actually, you know what? Let's go ahead and start the immediate short term, just like we always do, you guys. So we'll look at the 30-minute. We'll move on to the bi-hourly. We'll make this one the 6-hour, and the last one we'll make it the 12-hour, since we just looked at the daily bullish divergences that we caught. So immediate short-term time frame does have a bit of indecision. We are pitched to the upside. Good. The thing is that we are so close to the shallow areas of the bull weakness percentile, which means that we can usually be gravitated right into bear weakness. Good thing is that we are trading above the moving average, which is great. And now let's look at the bi-hourly to see what kind of edge we have here. As you can see, the bi-hourly is showing us neutral direction as well. Now this is likely to the economic reports that we have coming out. We still have PPI to come out. We still have the presidential formal announcement on Tuesday. There's a lot of indecision in the markets right now, but statistics are showing a potential move to the upside, so we do have to move furtively. We have to move cautiously and make sure that we are practicing our risk management. Make sure to leave those stops in, you guys. Okay, so this is the 6-hour RSI, also giving us a neutral bias in direction, if you will. And of course, the 12-hour giving us a massive indecision. Usually, I've mentioned this before, but my mentor once told me that if you can't find the edge within your trade, if you can't find that edge within your strategy, simply just don't trade it. Just don't trade that asset. Don't trade that trade. There's always an opportunity presented in the markets. I'm talking every single day. And, the next thing he said was the easiest way to make money sometimes is to keep the money, right? But I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me on Twitter, on Discord. I'll make sure to leave the links in the description below for you to consider joining the trading community in Discord, ARCa. But with that said, I wish you a good night, and I will catch you at the bell mañana. Adios.